A minute a day can make you a millionaire. Let's get it. Courtesy of CNBC, says U.S. recession isn't inevitable, but inflation is unacceptably high. So it's not as bad as it sounds, and I'll explain why. I'm sure you guys have heard the word recession thrown around there a bunch, but all that it means is that there's 2 consecutive quarters of decline in GDP, which is pretty much just what everybody's spending. Which I think a lot of people get confused with a bear market, which is just when the stock market is down 20%. A recession is something that people have been talking about, and it kind of has to do with what the Fed has been doing, and they're the people that control interest rates essentially. It is possible to get back to normal without having a recession, which is pretty much what Janet Yellen has been talking about. Even if it did happen, just because things are going down a little bit isn't a bad thing. Things have gone absolutely crazy within the past few years, so it really needs to come down. And that doesn't mean that after everything's settled, things won't just keep on going up. As far as what that means for the stock market and you personally investing, I would definitely say that it probably isn't a smart idea to try to time it and be able to predict whether something will or won't happen. But something that you can kind of mitigate that risk is if you take your money and kind of invest it periodically. Especially the last few months, really, everything has just kept going down. In reality, the best time to be investing is now because you have a lot higher chance of getting a lot higher return. But it's times like this where people don't have money and they're just scared to invest. Whatever questions you guys have, let me know, or whatever you think, put it down below, and we'll see you at the top.